Welcome to Building the Future, hosted by Kevin Horick. With millions of listeners a month, Building the Future has quickly become one of the fastest rising programs, with a focus on interviewing startups, entrepreneurs, investors, CEOs, and more. The radio and TV show airs in 15 markets across the globe, including Silicon Valley. For full showtimes, past episodes, or to sponsor the show, please visit buildingthefutureshow.com.
Welcome back to the show. Today we have Rayne Steinberg. He's the CEO and co-founder of Arca Funds. Rayne, welcome back to the show.
Great to talk with you again, Kevin.
Yeah, I'm excited to have you back on the show for kind of a part two. I feel very much like we ran out of time the first time, and we only covered maybe half of what I really wanted to talk to you about. But maybe before we get into part two, do you want to just give us a little bit of your background, where you grew up, where you went to school, and kind of how you got to Arca Funds?
Sure, I can do that. I'm a native New Yorker. Okay. I grew up in New York City, Manhattan, most of my life. I went to the Dalton School for my younger years, and then University of Pennsylvania, Wharton, for my college.
What did you take in college and why?
So it was a Bachelor of Science in Economics with a concentration in finance.
Okay.
Our family has just always been very involved in financial services,
Gotcha.
And my father was very involved with Wharton. So we all went to UPenn.
Oh, very cool, man. So walk me through your career up until Arca Funds, and then what exactly is Arca Funds, and why did you decide to start it up?
Sure. So I got out of college 2001, right into the bursting of the internet bubble.
Sure.
And Wharton is very much a feeder school for investment banks.
Right.
And, going into those banking programs, but it was just poor timing.
Sure.
At the time, it felt like poor timing, but I think it was actually very fortuitous that I didn't go that route. So immediately out of school, I started working with my brother at Wisdom Tree. Okay. And that's when we founded Wisdom Tree. And that was pretty much the next 10 years of my life was building Wisdom Tree, the exchange-traded fund company.
Very cool. So walk me through that transition into Arca Funds and what exactly Arca Funds is.
Sure. So I love working at Wisdom Tree, and really the premise was, great financial service products for everyone, transparent,
Sure.
liquid, best of breed. So that's always been my ethos.
Interesting.
The flip side of it, though, is working with a family member, is a whole different level of intensity. So it was just nice to change our relationship back to purely, just personal family stuff.
Right.
And that was the impetus to really leave Wisdom Tree.
Okay.
And I went into some high-fee product, hedge funds, and never really found the same connection, with low fee, really great transparent product. And this was in New York. And it actually spurred me to move out to California.
Interesting.
Just to try some different things. And I had always been watching crypto. It came on my radar during the financial crisis.
Sure.
But it really wasn't ready for prime time. When I got out to California in 2015, it was. The ecosystem had exploded. Just in complexity, the type of people that were involved. And I very much saw a similar opportunity to Wisdom Tree to create financial service products with this new technology. And similar to the ETF, more transparent, more liquid, a better product for investors. That's what I saw in crypto. And I really saw an opportunity to do something similar to Wisdom Tree in crypto.
Sure. And we cover that kind of in depth in part one, but I want to maybe talk a bit more about your investment strategy and how do you guys actually go about deciding which cryptocurrency to invest in? Because there's a ton of them.
Yes, absolutely. So our flagship product, the first one is our digital assets fund, which is a hedge fund. And hedge fund is, just a structure, a GP, general partner, and limited partner structure where the GP is the company and the limited partner are the investors. And in this, we only have qualified institutional buyers and high net worth individuals.
Okay.
And when we talk about crypto at this stage, and if anybody's been paying attention, 2018 was a completely different experience
Sure.
for crypto investors than 2017.
Sure.
The volatility is such that we don't really feel at this juncture as an investment that it's appropriate for the general retail public. So this is why we have the hedge funds and why we have qualified institutional buyers and high net worth individuals. So that's our first gate, is the investor sophistication and liquidity. We think is appropriate only for high net worth individuals at the moment.
Okay.
So then on our, yeah, go ahead.
And why do you say that, just out of curiosity?
Not that it's not appropriate for retail investors to get involved. I encourage everybody to do, and we can talk about that a little bit later.
Sure.
But the level of care and the stuff that you actually have to do in this space for safety of your funds, for really getting up to speed, is quite a high hurdle, and it's not really the way we're set up. And this is kind of the ethos of Arca, which is really to disrupt without destroying, is to move that ball down the field. There's a lot of blocking and tackling to do in here, both technologically and also with people's footing. These are people that are used to centralized systems where you lose your password, you call somebody. None of that exists here.
Right. Yeah.
Yeah.
Okay.
So this is, so a lot of the retail investor were attracted to this by, the 10x returns of 2017.
Right.
Less exciting in the down 90% of 2018. So even in the investment, the volatility of the asset class is just, if you're a retail investor and you put, let's say 100% of your retirement savings into just a Bitcoin IRA, let's say at the beginning of the year, that's a retirement account that has been vaporized. And I don't want to do anything like that or lead people to this without just having their eyes open.
Yeah, no, that makes a lot of sense. So I'm curious to know, how do you actually work with your clients to invest their money?
Sure.
And what
So
kind of
this is our
services you provide? Sorry.
Yeah, absolutely. So for this product, let's focus on the hedge fund product first, and we can talk about
sure.
some of the exciting things in the blockchain that we're doing. But in the hedge fund, the flagship product is a digital assets fund.
Okay.
So we focus in the mandate, we can invest in the top 100 currencies by market cap. So that's your first gating factor.
Okay.
We narrow the universe of investable coins down to 100. And then we do fundamental research on those 100 coins. So we're looking at the development team, activity of the development community. What are the incentive systems of the coin, the tokenomics? What is the utility? What is the experience? Basic stuff of early stage venture type of due diligence.
Right.
And we have a team led by our head of research, Katie Talati, who has experience in the crowdfunding and early stage venture. So there's that aspect, a very traditional financial service due diligence. And then married with that, we have a team of developers sitting side by side with our research team who actually go through the code, who are actually working on our products and projects in these same environments, interacting with those teams.
Interesting.
Yeah, which you really have to do, with this, because they're not just securities. They're not just financial service products. They're also technology products. So there's a level of knowledge that is really hard to find in one person. Very rarely do you find a financial service like research analyst who's also a world-class developer.
Yeah,
it's just not, things that you find in the same person. And you also don't even really find them kind of in the same companies. So this was kind of our aha moment on that fundamental research process, that you really had to combine those two, not holding one over the other, and really have a synergistic experience there. So that's the due diligencing of those coins. So once they pass that step, that would be the research team makes a case for the coin being included in the portfolio. It goes to an investment committee. And then it's a risk management practice. And I think this is where our Wall Street and financial service background really serves us well, because a lot of the original crypto funds came very much from the technology space and not so much from the asset management space. So picking the constituents of the fund and that investment process is one thing in the technology side, but then there's a whole risk management process of just managing a portfolio. And while that is fairly common in the traditional financial service world, it's rather unique in this world for people to have a heavy risk management overlay, to really understand that you're trying to limit volatility in these portfolios, that clients, the type of people that we're talking to, institutions, high net worth individuals, yes, everybody loves 10x, but
Sure.
nobody loves down 90.
Yeah.
How do you mitigate the downside while you're waiting for what we think is going to be a very, very big asymmetric return?
Sure.
But you don't really want to ride that up and down during this period. So we're trying to capture about 30 to 40% of the downside and 80 to 90% of the upside. And so far, that's about what we've done.
Interesting.
In the funds. Yeah.
So this might be kind of a stupid question, but the fact that it's all digital and it's not like I can just give you a physical thing and you potentially give me back a physical thing. How do you manage? Because I'm not saying you would necessarily do this, but if I buy cryptocurrency and I give you my private keys, well, like whoever has access to my private keys can wipe out everything, right? And take it for themselves. And I have I can't really do anything about that. So how do you work with your clients and other people to make sure that they trust that you're not just going to walk away with their private keys, right? And just take the crypto that you make?
So the way the hedge fund structure works is you sign an LP agreement with us, and you fund it we have a minimum $1 million investment, but that's we can do other things as long as you get there eventually. But
right.
You transfer that money, and that is your initial investment. You get a mark in the fund at that point.
Okay.
And then all the stuff that goes on our side is our wallets, our exchange relationships, our bank account relationships.
Okay.
And you get a monthly statement just like any other fund where it tells you how your investment is done. When you want your money back, you give us a redemption notification, and we send it back. So we're not managing your cryptocurrency wallets. We're managing ours and managing money for you.
Okay, so it's not really any different than any other traditional kind of investment where I send them money and they handle it. I get that's a very oversimplification, but is that a correct statement?
That's 100% correct.
Okay.
This is all the protections that you have in that space you have here. That's exactly the way this works.
Okay. So no, that makes a lot of sense. So I'm curious to dive into, what are your thoughts on buying cryptocurrency for retirement? It doesn't have to necessarily be what you guys do with Arca, but what are your thoughts on that? Because I keep reading all these articles that say, you should buy cryptocurrency and as potentially one of your retirement verticals, and I don't know how I feel about that. So I'm curious to get your thoughts on that.
Yeah, the way I view it is it's a diversification play when you're talking about retirement. That right now, while it seems very risky and, like I said, inappropriate for unsophisticated investors,
sure.
There is a scenario where you have real financial service disruption. This is where you get the doomsday people, gold, barter, crypto. There's really, we have no evidence. We don't know what happens in a catastrophic event like that. Are people still running computers? We have no idea. But I do think that there's a space for an uncorrelated, potentially outsized return like asset in that type of environment that crypto totally could be. So a small piece of your allocation that is almost like an insurance policy against something like that happening.
Okay. No, that makes sense, right? I think it's kind of like anything. You shouldn't put all your eggs in one basket, especially if you're saving for retirement. And that's what you guys do. We talked about it kind of in the first part, that you only take a small percentage of somebody's investment portfolio to put into crypto, right?
I mean, we would if a client was desirous of giving us 100% of their allocation here and wanted to do that, we would do that. But that's not really the type of clients that we're speaking to.
Sure.
Have large investment portfolios, and this is generally a small part, and we think that that is a very good strategy. It's unclear whether you would want a massive allocation to crypto here.
Sure.
I think there's going to be, as it matures, things are going to be different. But right now, it's very nascent, and we really don't know the direction it's going to go. So, careful here. Diversification, it's a one tool in your quiver of financial allocations.
Yeah, and even just the whole blockchain space is kind of very new, right? And so you don't even really necessarily know how that's going to play out in the next few years either, right? Is that fair to say?
Absolutely. You do not know the next few years. It's hard to get visibility into the next 6 months to a year, I would say.
Sure. Interesting.
What I would say though is I truly do believe though that this is a revolutionary technology that will change the way we do financial services, and you do want some exposure to it. And this is human beings are not wired really to make these decisions. So
sure.
The time that people want to be investing in Bitcoin and crypto and all the excitement was between 10,000 and riding up to 20,000.
Sure.
Now that you're getting the opportunity to buy the same asset at a fraction, 1/10 of perhaps a price of less than a year ago,
sure,
there is much less desire to do so.
Yeah,
so,
fair.
The people that make a tremendous amount of money and the funds that have made a lot of money in other asset classes are really the ones that started when asset prices were incredibly depressed. So we may look back at this, if the thesis does play out, at this being a moment in time, and not saying that you can't go lower, that this was a great time to be entering this market, for sure.
Yeah, no, that's fair. I know just watching kind of friends and other people that were playing the market, it was interesting to see the guys that bought a couple years ago, and then when it went crazy, right, earlier in the year, and then it kind of just tanked, right? So it's interesting to just hear the different types of stories that the people have that you even know firsthand, right? So it's interesting.
Agreed.
So I'm curious though, and we talked about it last time, but I think it makes sense to cover it again. Why should people invest in cryptocurrency? Because you made some really good points last time, and if people don't listen to part one, I really want them to get what you were talking about there and the learning side of things and your rationale for everybody to buy a little bit of cryptocurrency.
Yeah, I really think that outside of even the investment, really what's going on here is this transition of having custodians and other large entities as the gatekeepers to your power.
Okay.
That's really what these digital assets and cryptocurrency is about.
Okay.
If the thesis plays out, there is a world where all of the trust centers, financial service companies, even governments, things like this, places where we all agree to collectively give our power and trust for efficiency, safety, security, and other things, that this technology, in theory at least, allows you to serve those functions, but without giving up that power. So the thing that you want by experimenting this and having your own wallet and your own keys is really learning what it's like to be a custodian of your own value, and kind of the things that you have to do to safeguard it. Because if you don't take those precautions, you can lose quite a bit.
Sure.
100% of whatever, keys that you lose. So
Sure.
It's better to start with a small amount, get used to what you'd have to do there, and see if the benefits for you outweigh working with, a central institution.
Sure.
These things never really come up while things are going well.
Yeah, interesting.
That's the problem with this is maybe nothing ever happens and everything is fine.
Okay, interesting.
But if something does happen, you're not going to be prepared. It's like earthquake and those type of preparations.
Right.
Everybody,
Yeah,
wants to have your water and bug out bag and all those things, but nobody really wants to do it pre-earthquake.
Yeah.
So get used to being your own custodian. Get used to taking power back. I would also think about even things outside of the financial service world. We've given a tremendous amount of our information and things like that to the big social media companies,
Sure.
Google. All of a sudden, people are starting to realize, is this trade-off that we're making for convenience and speed, does it actually outweigh what you're losing on the privacy and power side?
Sure.
And maybe some of these entities that we think are quite benign have their own agendas, and it's just people there that have their own agendas. So start to think about the stuff that you find very valuable and want to keep your own.
Yeah, that makes a lot of sense. So you mentioned a small amount of money. What would you recommend is a small amount of money? Like $10, $20, $100?
Sure. I would say the beauty of Bitcoin and all of these digital currencies is they're almost infinitely divisible.
Sure.
So, you can get in a learning experience, you can get just as much done with $10 in Bitcoin as 100.
Sure.
So I would say, just start with something that you wouldn't mind losing.
Sure.
And, start to interact with the ecosystem. Get a wallet, get Bread, get Abra, and, fund it.
Sure.
Try reseeding it from one device to another. Work on keeping your private keys secure, and just start to do some things like that. And then, start to interact with the ecosystem of sending, a little Bitcoin to somebody somewhere else in the world for nearly costless transactions and nearly instantaneously, and not having a banking intermediary. And, all of a sudden say that there's actually a lot of things that you can do in this ecosystem that normally the type of headaches you have to deal with banking and all of this other stuff that you don't have to do here.
Yeah.
You can start to see the utility and, why there is this excitement about it in general.
Yeah, no, I think that's really good advice. But I think it's a good time to talk about some investment strategies, either from what you guys are doing or what advice do you give people that are looking to maybe do it on their own? Because I know you guys work with high net worth individuals, but can you walk us through some investment strategies or ideas that people should try or that you guys try?
Sure. So like I said, our investment strategy is a fundamental bottoms-up approach with risk management.
Right.
On the investment side, if you're investing in this as a retail person,
sure,
I think it's very difficult. It's even more difficult than individual stock selection in like normal financial services or equity investing. So to invest your own portfolio there, doing research and things like that, there's a whole level of sophistication and knowledge that is difficult to procure without a tremendous amount of work.
Sure.
The problem here is that the fundamental values of the system aren't even established yet.
Yeah,
it's hard for anybody to even say why this would succeed or what's driving it. So for a retail person, I would say start investing in the larger currencies, things like Bitcoin,
okay,
and maybe a regular allocation into a pool of Bitcoin at the moment. I really do think that there will be Bitcoin around.
Okay.
And you will actually get some, if it's not going to be around or something is changing there will be a lot of at least visibility into that decision. So you wouldn't have to pay tremendous attention to this, because that's the thing in this space, is it can happen very fast. And if you're not paying attention to it daily, if it's like your job, then it could be a problem. For high net worth individuals, I really do recommend them finding a portfolio manager or some investment practice that they like. So somebody's, it aligns with the way they think about it. They like the person's research process, or if it's algorithmic trading, something like that. And then I would also, anybody that you, give money to in this space, check out their biographies and background.
Sure.
And also pay attention to their security, custody, and the way they talk about due diligence.
Okay.
Because even outside of the investment, practice, the custody, security, safekeeping of the actual assets, because you're your own custodian as yourself, but the investment manager is also basically their own custodian in this space.
Interesting.
So there's just as much, you want just as much rigor around their security procedures as their investment procedures, because that could actually be, outweigh anything that they would do on investment could be swamped by, a hack or something like that. So, make sure that they're very buttoned up in that. And that's one of the reasons why when I talk to high net worth individuals, even sophisticated investors, I really recommend, if they're doing this for investment, to give it to an investment professional.
Okay.
Because when you're talking about millions of dollars, do you really want to be dealing with private keys, hot wallets, custody, and things like that? I would say no at the moment for large, sophisticated investors.
Well, I think part of the challenge with all that stuff you just outlined is you need to be somewhat technical to set all that stuff up and maintain that and make sure your private keys get stored in the right spots, right? So they don't actually get leaked or hacked or whatnot, right?
Exactly. While Bitcoin, just to use the example, is
Sure.
very secure, most of the problems in the entire space are with individuals or institutions' points of security. So somebody being careless with their own computer, that getting hacked, things like that. So people just aren't used to having such a high, really high different outcomes based on computer security. Normally, you get hacked, you call somebody, you change your passwords, it's inconvenient. It's not value destroying of millions of dollars generally.
Yeah, or you lose your USB key, right? Like with your private keys on, and then they're just gone. It's over.
Yes, exactly.
Thanks for listening to Building the Future. This show is heard by more than 1 million people monthly in over 15 markets worldwide, including Silicon Valley. Kevin Horick's guests are leading business owners, successful entrepreneurs, and merchandisers worldwide. Now, your brand has an opportunity to tap into this dedicated and active group of business people who are looking for places to invest and the right opportunities to support. Find out how you can get involved at buildingthefutureshow.com.
I'm curious to get your thoughts on, what about mining your own cryptocurrency? Do you have an opinion on whether people should do that or not do that, or are you kind of indifferent?
Well, right now, mining for profit is really difficult with the prices where they are.
Sure.
I recommend it, though, for a learning experience and to understand hashing, reward systems, mechanisms. This is the type of stuff that I think is even more important, especially for smaller people, is to get familiar with this technology and understand more fundamentally how it works. So I would recommend somebody mining, but not I wouldn't count on it for a source of income.
Okay, sure.
But I would recommend them checking it out, seeing how different reward systems works, because that's really the interest. Now you get to the interesting part about this, is that these things are also incentive mechanisms to use the currency and to mine it.
Okay.
We're still creating these incentive mechanisms. We don't even really understand, how they work, what's going to be the ones that survive, what are the best incentive mechanisms. So it's very interesting for people that are interested in behavioral economics or just, finance and economics in general, to really, you get to see kind of real world experimentation on the adoption of, economic models.
Sure.
So that is very interesting. And I think that that's just broadly taking more power back for people.
Yeah.
Be more interested, be more engaged, get in and do something like that for sure.
So for people that don't understand, how does mining actually work, and how do you even really do it?
So it works by basically using a computer to solve complicated mathematical problems. And these mathematical problems are wrapped. This is how the transactions are verified. Right. So it's basically just a brute forcing of computer power on these financial puzzles. And then when the right one is returned, that's called hashing. Right. You or the mining pool is given a Bitcoin reward.
Right.
So that's basically how it works. And now there are many specialized computers and graphics cards that are basically designed just to do this as efficiently as possible. So sure. More and more efficient computing is being brought to bear on this all the time.
Sure.
So this is why it's really hard for retail people to use, non-specialized equipment to do this, because there's an electricity component, a time component of your computing power, and if you're not using the most efficient thing in usually large quantities, it's unlikely that you will even ever get a reward, honestly.
Yeah, no, that's fair, and you need a pretty good computer and expensive graphics cards. And I don't know if anybody out there listening remembers, but earlier in the year, there was a shortage of graphics cards. Like, you couldn't buy certain graphics cards because they were the top graphics cards for Bitcoin mining, or I should say cryptocurrency mining. And there was a shortage. At least locally there was. And I was reading online, a bunch of people couldn't get certain graphics cards because there was such a shortage because of the spike in people trying to mine their own cryptocurrency.
Absolutely. That's what you see. Crypto is no different than any other market. Bull markets attract everything. The picks and shovels get very scarce. Now I've read articles about people selling mining equipment by weight.
Oh, interesting.
Yes. So, yes, prices have fallen to such a degree that miners are unloading some of their equipment by the pound. So it shows you what a difference a year can make.
Yeah, it's interesting. Yeah, and I know guys that make a few $100s a month after they pay their electricity bill and all the other costs associated with that. And obviously that's not a livable amount of money, but it's pretty, you can actually make a little bit of money if you kind of tweak your process, refine your things, keep up your hardware. It's almost like, and well, you can correct me if this comparison is wrong, but it's almost like buying a gaming computer. If you want to play the latest and greatest thing on the highest settings, you need to buy a new graphics card or computer or motherboard or hardware, other hardware, right, to stay up on top of it. It's kind of similar in the Bitcoin mining space. Is that a fair comparison?
Absolutely. And you can make a few $100s a month. You can make more than that.
Sure.
Right. It's just right now with prices where they are, it's very difficult. But it's definitely, that's a very good analogy.
Sure. So I'm curious, though, where do you kind of see some of this stuff going? Because you guys are obviously investing in it. You're doing development in the space. Obviously, crypto and blockchain are really new. But what do you see the big kind of fascination, and where do you think this is going? I know this kind of gets more into the thesis side of things that you keep mentioning, but how do you kind of see the space, and what do you kind of see is potentially going to happen in the next 6 months to a year or beyond that?
I really see a period of kind of consolidation and a fallow period coming, similar to the kind of wipeout after the dot-com crash.
Okay.
So you had all this excitement, pets.com, everything.com.
Sure. Yeah.
You kind of had the same thing in crypto.
Okay.
Lots of excitement. And now you have this kind of fallow period where a lot of the hypier and not substantial ICOs that either had bad technology, bad theses, or whatever, are just not going to be able to survive in an environment where there's no enthusiasm and less new capital coming in. Yeah. So you have this period where those less viable projects are going to go away.
Sure.
But then you have the people, hopefully we're one of them, where you're doing fundamental things that are actually of value and utility to the broader system. So I think you get those type of projects go on, and the people that were here to build serious things remain here because nothing has changed in the thesis or outlook of this. It's really just all asset price and valuation.
Sure.
Everything is more mature and better than it was at this time last year. So I see this going along, bringing more and more people from the outside system into it. And I do also see, in a more macro sense, what's happening in the broader economy is the type of thing that will drive interest back to, crypto and blockchain. This,
sure.
All of a sudden, apparently the stock market doesn't just go up. It can go down. You're seeing real issues in the emerging markets. You're seeing real stress in the EU. We're talking Brexit, Italy, all of these are the large centralization projects of the globe. We always kind of thought we were just kind of marching more and more to one kind of centralized, unified, like kind of global authority. It seems like something is happening on the way to that. So I think if you actually see real dislocation in some major economies, and maybe a funding or debt crisis here, housing crisis, that all of a sudden your earthquake preparedness kit is going to come back in vogue, and you're going to see some real interest in crypto spike, and it'll be actually much more mature and useful when this happens this time. So in the financial crisis, there was nothing, and you had Bitcoin come out of that. Now you have an ecosystem of a lot of different actual useful things that can serve utility in a time of systemic stress. So I see that those things will become in vogue. There's kind of an unwind in the broader markets.
Yeah, no, it's interesting, right? Because I think the thing that seems to me anyway, just reading about the dot-com crash of the late 90s and early 2000s and kind of going through that and remembering that time, it seems like the companies, though, that had a solid business model, sure, lost a lot of money and some of them went under, but there's a lot of companies that pulled through it too, right?
Yeah, exactly. All the big boys that you see now pulled through it.
Yeah.
And even ones, and just to be fair to like people that didn't, they might have had fine business models too. But
sure.
In those type of downdrafts, a lot of people get caught up. Wisdom Tree, just to give a corollary,
sure.
We almost got kind of taken out in the financial crisis, and that was business model was fine. Sometimes timing of broader markets and things like this, you may just not be prepared and capitalized appropriately to make it through these type of things. But the people that are well capitalized, do have good business models, and do survive, then really have kind of a cleared playing field. Think of Amazon.
Yeah.
Started out with just books.
Yeah.
And, they lost, I think, 95% of their value
Wow.
in the dot-com crash.
Right.
You would love to have picked up Amazon there. The thing is, you just don't know it's going to become Amazon. And that's kind of the way I see this space. So,
Okay.
that's why when I talked about like how to invest in it, it's difficult to pick winners in this space for the casual or somebody that's not paying a lot of attention. So that's why I recommend using an investment advisor to get broad exposure to this with somebody whose job it is to watch this stuff every day. Unless you're willing to do that, that's what I would recommend doing.
Yeah, no, that makes a lot of sense. It's interesting, right? Because the thing that's the most fascinating thing about the whole crypto space to me is being part of something that came out in your lifetime that will change almost everything. Not necessarily saying for better or worse. It's just, it will change everything. And it might keep things similar or completely different, or somewhere in the middle of how we've done things with kind of money and assets, right? Is that fair to say?
Yeah, I think that's exactly right, for sure.
It's almost, to me, it's almost as important as the internet itself and how much the internet changed the world. This cryptocurrency blockchain space could be just as revolutionary. I get that it's on the internet, and without the internet, it probably wouldn't survive. But I think it's just as big of a thing. Do you agree with that?
Absolutely. In theory, that is what we're talking about. And a lot of people use the analogy of the internet being the democratization and the making the ubiquity of free and frictionless transfer of information.
Sure.
People say the ultimate expression of blockchain and crypto would be the frictionless and nearly free, or as low cost as possible, transfer of value. So we're reaching a point where you can legitimately see that the ability to transfer actual, real, and provable ownership of things in the real world nearly frictionlessly and freely to anybody and represent anything. It's not there yet, but just
Sure.
the way the internet started out with like a single email, and we all remember what our original dial-up experience was like, and it was hard to really see. There were obviously visionaries that were like, oh, this is going to become ubiquitous, free everything and transfer, and you're like, okay, in my 9600 BPS dial-up, downloading a 23 K GIF took 5 minutes. Okay, whatever. So I think we're similarly in the the ball game. I like to use the baseball analogy that people say, what inning are we in? I say we're not even. The game hasn't started yet. Baseball might not have even been invented yet. Like we're playing cricket or rounders somewhere. It's very far off. And this is even harder to do than the internet because value is much more, entrenched in real stuff. So this is going to be a longer project than I think the internet, but I think just as transformative. And, when we look back at these early days, it'll be similarly kind of hilarious. And it's, how we look at the early days of the internet and how, obviously raw and young that technology is and where it is now. I think we're going to see a similar trajectory, just longer. I think it'll be a longer period.
Yeah, I agree. The other thing that I find interesting that I think a lot of people struggle to wrap their head around is digital assets can mean a lot of different things, right? And I know probably the easiest things to think about are if you buy a concert ticket or something and you don't actually print it off or it doesn't get sent to you in the mail anymore. You just scan it on your phone, right? And being able to trade different digital assets with either things in the physical world or other digital things, or a hybrid of both, is going to be really, really transformed by crypto and blockchain and all this entire space. Do you agree with that?
I do agree with that, and that's why I encourage people to interact with the ecosystem, just so they can start to understand, the broadness of what these things mean, and to really start to think about the current system that we have even outside of crypto and blockchain. Because when we say digital assets, we're talking, blockchain, crypto assets. They may represent something in the real world, they may not, but also we're already completely in a digital asset world. When you talk about the money in your bank account, there's no Scrooge McDuckian vault anywhere holding your money. It's a ledger, just like blockchain. The only difference is it's guarded by your bank, and they manage, what goes on there. There's nothing like, if you think about security and things like that, a banking error, like Monopoly style, that wasn't in your favor, that there's no trace of, and this happens to people. Sure. What happens? So you're dealing with digital assets right now. It's really just who controls them and how they're transferred. So start thinking about the world and where this stuff resides, and that's why I encourage people, to get involved.
No, I think that's really good, but we're kind of coming to the end of the show. So is there anything else that you want to mention before we close out the show?
Sure. Just on for Arca, we talked mainly about the investment products this time. We actually just got back from Washington and meeting with the SEC on our Arca U.S. Treasury Fund product. And this is just one of the steps. And I really view this space as not really competitive yet. I think that we're all just trying to build the pie. So I encourage everybody to keep innovating out there. But this is our first answer to giving a 1940 SEC, Fund Act product, the same structure underpinning an ETF. So to give people of all stripes, some comfort and familiarity with products that exist right now in the real world and applying them to crypto. So I'm excited about that. Very cool. And I really think that this time, for the people that make it through here, we're going to look back at this time very similarly to like the wipeout of the internet. And for the people that really believe in this technology and moving forward, this is a great time to get involved. So for the people that haven't done anything yet, take a look now. These are things in life generally, when the hype dies down, is a great time to look at things.
No, I think that's really good advice, and congrats on the FCC thing. That's huge.
Yeah, I don't want to overstate it. This was a initial meeting. So this was just
still,
meeting
right?
with, yes, it is. We're very proud. It was a tremendous accomplishment, the registration and the actual demo. It was very well attended by multiple departments, and it was really, invigorating and, energizing to hear that the commission was taking our application so seriously and was really understanding what we were trying to do, because it's this one product kind of is a little allegory for the whole space. It's combining technology, new technology, with traditional financial services, and then still living in the traditionally regulated world. And how do we evolve both the products and the regulatory side to, not stymie this new technology, but also not abdicate their investor protection role as well, because it's still very important.
Yeah, it's interesting. And it's cool that they're taking this space seriously, right? Because I think a lot of bigger institutions are still very hesitant to even consider it. Have you found that?
Yes, for sure.
Yeah. So, no, it makes a lot of sense. But, well, let's close the show again with mentioning where people can get more information about you guys and any other links you want to mention?
No, just visit us at Arca, which is ar.ca. We're going to be launching a new site soon, and there's going to be lots of materials and investor education and stuff about the Arca U.S. Treasury Fund and our hedge fund products. So visit us there.
Very cool, man. Well, I, again, really appreciate you taking the time out of your day to be on the show, and I look forward to keeping in touch with you, and have a good rest of your day.
You too. Have a great day.
Thank you.
For the call.
Okay, bye.
Thanks for listening. Please visit our website at buildingthefutureshow.com to join the free community, sign up for our newsletter, or to sponsor the show. The music is done by Electric Mantra. You can check him out at electricmantra.com and keep building the future.